So hello traders, welcome back to another video. In this video I'm going to take a different nosedive. I'm going to go into something that we've never ever done, although we've been doing it behind the scenes, or we've been doing it for ourselves and not talking publicly much about it. In fact, for majority of the people who are my friends and are around me, they normally ask me questions in line with what I'm going to talk to you today about. So today I'm going to go through the annual report of Safaricom. So Safaricom did their 2024 annual report. They recently released their earnings. They did their earnings report, I think about 3 or 4 weeks ago. I'm not sure, or 2 weeks. I'm not sure specifically on the date. So I've been going through the annual report and also looking at its share price from a technical perspective. Remember, by the end of the day, these processes are replicable in that, yes, there are some new skills that you develop, but really what really matters is for you to understand the fundamentals. So for those of you who never understand the fundamentals, I think this is one of the best avenues for you to understand why fundamentals are also important if you're going to have a career in finance, or at least to develop an understanding of fundamentals. So if you look at an annual report, it basically tells you how healthy or how good a company is from a fundamental perspective. Remember, basically, if you look at stock prices normally tend to follow earnings most of the time, in that if a company is generally increasing its earnings, then the general outlook is for the share price to keep increasing over the long term. However, this cannot be quantified on a day-to-day basis, and that's why it's important for you to understand that the price and the value of a company sometimes don't always go hand in hand. Sometimes a valuable company can be trading at a cheap price, and an invaluable company can be trading at an expensive price. So there are different methods also when you're looking at these fundamentals which you can use, or there are different philosophies which you can ascribe to when you're generally looking at the stock market. For example, there are people who just want to identify the long-term trend of the market. They'll keep on buying stocks in the direction of that particular trend. There are people who are looking for momentum. For example, if AI is hot, they will move to AI. If a particular sector is hot, they will move to that particular sector. But for me, what has really made sense after years of doing this and trying to seep out information is the idea of value investing, in that you're trying to generally look for a valuable company that is selling at a cheap price. And if you think about that, the best analogy I like using is, for example, if you buy land in Lavington, there's the specified value of an acre of land in Lavington. Let's say an example, 80 million, 100 million. But if you find the same land being sold for 30 million, then you've definitely found a very good bet, because you're finding something that is extremely valuable selling at a cheap price. Now, if you think about stock prices, I'd want you to understand it from that perspective, whereby sometimes stock prices don't necessarily show the true value of something, and sometimes they always show the value of something, and sometimes they even show more than the value of something. Like sometimes something is more expensive than it should be, meaning that it's trading at a higher price. Okay. Also, it's a disclaimer. I'm not doing this to tell you that this is a recommendation for you to either buy or sell. By the end of the day, we do these videos so that you guys can understand the thought processes that we follow when you're making some investment decisions, because by the end of the day, what you're trying to do is to learn how to do this for yourself so that you can do it long term, rather than learning one recommendation. For example, I might tell you, yes, Safaricom is a good buy right now, but have I told you when I'll sell? Have I told you why I'll sell? Will I tell you when things change? Not necessarily. Therefore, it's wrong for you even to assume that you can follow that buy recommendation. Okay?
We're giving you the chance to learn Forex for free at Financial Hub, but there's a little twist to it. All you need to do is fund your Paperstone account, and boom, you're all in. Deposit $100 and get access to our basic course, perfect for beginners. Or deposit $250 and get access to our exclusive course that is best for advanced traders. Why is this huge? Because you get to learn while you earn. Trade the real money and get real experience. And also you get lifetime access. Once you're in, you're in.
So if you look at a company's annual report, it tells you quite much about the company. In fact, it tells you generally the financial position of the company, how the management is thinking about the direction that they want to steer the company, the executive summary, that is, how is the company in general? Do they think they are moving in the right direction, or are they thinking that they are stalled? What is in their long-term plan of the company? You get a lot about a particular company when you just go through the annual report. For example, last year Safaricom had record profits. The record profits where they surpassed about $3 billion in annual revenues for the whole Safaricom subsidiary. Now, when we're talking about this annual report again, it tells us specifically, are we making money here or are we losing money? For example, in the Ethiopia base where they are currently setting up, they've been there I think for 3 years or 4 years right now, they're still making losses. So they're not profitable in Ethiopia. However, if you look at the trajectory of those losses, the losses are not generally increasing. In fact, they are getting more customers, so they're generally improving. And that's why it's important also to pay attention to the details. For example, a company could be making losses, but it's making losses as a function of expanding rather than just making losses. So you need to also understand the nitty-gritties and the details that are contained in that particular company before you make a decision. And sometimes some of these things will need some background in, for example, accounting. You must understand, for example, how to read a balance sheet. You must understand how to read a statement of cash flow. You must understand how to read an income statement, because if you don't have the knowledge of reading those things, then these annual reports are a waste of time. Okay, but if you understand how to do those things and you have methods that you use to, again, and these are the things that I think if you're interested in learning how to invest, you should at least learn some of these things. All this knowledge that you have around these things, you gathered it from the internet. So if you're willing to put in the effort, trust me, you'll definitely come across knowledge that will help you in line with this. Now let's look at some of the things that are highlighted here. For example, there's the report of the directors. The directors will definitely give out a report. Okay, so, and this report will probably cover the macro view. Not only will they talk about how their company is doing, they will also talk about the general economic outlook. For example, there are times whereby a company does not do well, not necessarily because the company is not doing well, but generally the whole economy is not doing well. A good example is COVID times. During COVID, yes, you could have found some companies had a decrease in revenues, but generally the economy also contracted. So generally the climate was bad for the business. It's not the business that was bad. The climate was bad. And there are some traders who actually make money by generally looking for periods when the climate is bad, and then they buy during those periods, and then the climate becomes good. As companies are recovering, they make money and they get out of those positions. Okay, so that is generally what you'll get out of this. So I'm not going to go into the nitty-gritties. I'm just going to share the overview process for you to understand, and then it will tell you, how is the company doing and what is their plan for 2025. For example, what projections do they think about 2025? Do they think they'll make more money? Do they think they'll grow? If they'll grow, at what rate? If they'll grow and at this rate, what will be attributable to that growth? For example, if you're now expanding into Ethiopia and, for example, you get a license for you to operate as an M-Pesa in Ethiopia, that generally means that you could see an uptick in revenues from that. Okay, so you need to understand also, okay, what is your forward guidance? And also, this will help you over time. You may be able to even start understanding some patterns. For example, some management teams like inflating what they think about a particular company or what they'll do, but they don't generally attain those targets. Others, they normally undersell themselves, but they do earnings higher than what they're talking about. Others are quite accurate in the estimation. And that's why you'll be able to even hear people saying the quality of the management of that company is quite good. That will also help you as you're making the decision on whether to buy a particular share or not. Okay, so you can see clearly for 2020, you'll see the key performance indicators for each year. Okay, so what are they doing and how have, in fact, that's the thing that you should generally observe. Like, for example, if I just look at it, I can see that in 2020 they made 251 in revenues. In 2022 they made in 2021 they made 250 million in revenues, and then in 2022 they made 281. In 2023 they made 296, and in 2024 they made 335. That is revenues from the services that they offer. Okay, so if you look at the general revenue from Safaricom, it's on a steep increase. Like they at least are growing. Okay, the revenues are growing, the revenues are not decelerating. So you're generally looking for a company that has earnings accelerating. Okay, earnings that are going forward. For example, if you just look at the earnings, right, in 2022 it was 281, 296, 335. That means if I extrapolate for 2025, a 350 billion shillings, which is about $3.5 billion, will not be a surprise, and that would also mark an increase. And then it comes down to earnings. Now, what are the earnings before tax and interest and EBITDA, and what is the profit for the year? Do you know, are they making more money or less money? Because again, if you're generally improving on your revenues, it does not necessarily mean that you're improving on your profitability. Okay, for example, if you're making so much money but you're reinvesting back all that money into growing the business, the company might not sound as profitable, but it is profitable because in the long run you're investing in growth of the company. Okay, so there are companies which will distribute the profits that they generate as shares, and they'll give the not as shares, as dividends, which will be passed to the shareholders. But there are companies which will choose to reinvest a big chunk of their profit into growing back the business. Okay, so that is a different scenario, and you need to understand. Okay, so as you're doing your analysis, you'll also pay attention to those things. So you look at the business review. Okay, so yes, we have the revenues. These are the revenues, but where are they coming from? Are they coming from M-Pesa? What chunk? Are they coming from calls? What chunk? Are they coming from Wi-Fi services? What chunk? Okay, if from calls, what is their market segmentation? How big is the market that they have, and how big do they think they can grow that market, and what is the potential in that side? Like for example, right now I believe they have more potential on M-Pesa than on calls when it comes to some markets they're expanding to, because if you look at how much people make generally from calls, especially with the invention of the internet, it's gone down. But if you look at a service like M-Pesa, it's still gaining adoption, and it's a very powerful technology, which if the more they expand, the more they're able to supply that technology to places, the more money they'll be able to generate for themselves in the long run. Okay, so you'll get that, you'll get the business review, you'll get the risk management framework. Okay, so besides that, you'll also get the earnings. For example, I know people are very interested in these things. Okay, you'll get the earnings of the different companies, the different people who serve, especially the highest people. Okay, so like for example, let me share with you. Yeah, so like this is the director's remuneration report. So if you look at just that, you can be able to tell how much the CEO takes home, how much the CFO takes home. Actually, I was quite surprised to learn Safaricom's CFO is called Dilip Pal. He's an Indian he's quite experienced. He's served in different companies. But if you look at, like for example, this is something that will be interesting to majority of you, especially the young people. Peter Ndegwa, who's the executive CEO for Safaricom, he banked about 94.3 million in salaries. That is the salary that he gets every month. If you look at the annual accumulation, it was 94.3 million. And then he gets a bonus of about 134 million. So he got a bonus of 134 million last year, 2024. And he has non-cash benefits of 23.9. So if you think about Peter Ndegwa made 252 million last year from serving as Safaricom CEO. So you can imagine how many people in the world are able to gross such an amount. There are very few. You must be leading a very big company for you to get such a handsome reward. Okay. If you look at the second person here, who's called Dilip Pal, this is the CFO for Safaricom, the Chief Financial Officer. In salaries, he's made 58.9 million, so about 60 million. Bonus, he got 35.1 million, so also quite an amount. Non-cash benefits, he got about 19.8 million, bringing his total earnings to about 114 million shillings. So that is what the different directors earn. You can now check the non-executive directors. You can check what they do, the different people, how they contribute. So if you just think about how much this company is spending on human capital, by looking at this report, there are about 20 names, 15 to 20 names, I think, around here, who which cost the company about 463 million. Okay, that tells you that a good business is essentially built by people, and you'll spend a lot of money on hiring the best talent if you're going to develop a good company. Okay, and you can see now Safaricom with 465 million going into just salaries. Okay, so you can come and also look at what happened in 2023. For example, you can check 2023 and compare with 2024. You can see if he earned more, earned less. You can also see why he earned more, why he earned less, and you can be able to know also how to position yourself or how the company is generally doing. Okay, so you'll also see the different people. For example, the auditor, an independent auditor, that's not someone who is in Safaricom, will audit the books for Safaricom and come up with a report. This is someone who's trained in that field, like someone like me who's trained in finance. You'll do an analysis of the report that is shared, and you'll give out your audited report of that particular company. Okay, so for example, in the US, there are companies which actually just do that job. Their job is independent auditing of companies before they do their annual reports and share their outlooks. Okay, so you'll see that, and then you'll see now the three most important things that you should pay attention to when you're looking at the fundamentals. That is the income statement, that is the statement of profit or loss. Okay, so it tells you how much this company is generally making, and it often leads to a variable known as earnings before interest, taxes, depreciation, and amortization, which is a bit complex because you can think about a company that has earnings before interest. So interest is if they have loans, they'll pay interest. Taxes, you definitely have to pay taxes. Depreciation, for any assets that they have, the assets will either, I'm not so sure whether it's assets that will either depreciate or, yeah, they'll have assets which depreciate. For example, if they have a building, that building may gain value, or may, like if you buy laptops for Safaricom, those laptops will be less valuable next year than they were the previous year. And then amortization, so you'll come up with that number, then that number will lead you to the operating profit. The operating profit is how much this company has generated before it looks at some of the costs that it has. For example, financing income, financing costs, fair value adjustments. So you look at the operating profit, and then now you look at tax, and then after tax now you'll have the general profit for the year, and then you'll do now the discountings that we were talking about. And after you do all that, you'll be able to come up with profit for the year and the equity holders of that profit. And then you look at the earnings per share. Okay, earnings per share basically is self-explanatory. It is basically how much is this company earning per share that is traded in the market. Okay, a higher earnings per share, let's say if you look at something called price to earnings ratio, okay, it tells you how much this share price is selling depending on the earnings that this company is generating. So it's some complex terms here, but not that complex. If you just hop onto YouTube and look at some of these metrics, it's very easy for you to pick them up. I've also picked them up over the last few years just by learning that, among other things. Then you can look at the statement of financial position. Okay, so how is the company positioned? You know, what assets do they have? What liabilities do they have? What are the current assets they have? What are the non-current assets they have? What are the current liabilities they have? What are the non-current liabilities that they have? So you'll also have that explained well. And then finally, you will have now the balance sheet, or at least how is the company now if you look at the balance sheet. Okay, so besides now looking at the statement of cash flows, you can now come in and look at the balance sheet. I've not seen the balance sheet actually here. I don't know. So you should also look at the balance sheet of the company. It should be somewhere around here if you just go through it. And now after you look at all these metrics, you can be able to, at least now after you're done with that, like for example, for me, after I look at all those metrics, I have my checklists that I'm looking for. For example, I'm generally looking for a company that is increasing its earnings. I'm not looking for a company that is not generally increasing earnings, because like I said when I was starting these videos, I believe that equity prices tend to follow long-term the direction of earnings. So if a company is generally earning more, then that company stock should generally do well over the long term. So that's one indicator that I'm generally looking for. I'm looking for also earnings per share to see how much is it selling at a discounted price, or is it selling at is it selling at a discounted, fairly valued, or is it expensive? And then after I look at all these fundamentals, I also look at the macro theme. For example, I just see where is the country, are interest rates generally going up or down? Do you expect the climate? What is the business cycle? Which stage are we in the business cycle? And then finally, what I will do after I do all this analysis is I will look at a chart. For example, if I just look at Safaricom's share price here, if you look at it from the weekly chart, let's look at it from the bigger picture. You can see that this stock has generally been down. Okay, so if you look at it historically, you can see that the market from about 2020, when the COVID crisis came along, there was this huge adoption of internet technology and all that. And you can see this stock moved from about 24 to top at around 2045. That is in August 2021. And then from 45, we've seen a steep decline from then, sending prices back lower to about 12 shillings a share back in November of 2023. And then now you can see that generally it looks like prices have started recovering. Okay, so my call is that Safaricom could easily attain 25 shillings a share. I think if we beat 25 shillings a share, we could easily see 35 to 40, 45 shillings a share, depending on how things evolve. Again, remember, this is not like a prediction. It's a long-term thing. So if next year, let's say their annual report indicates they're making less profit, that would mean I change my mind. And that's why I'm saying you can't really follow up. But if you just look at the chart generally, you can see that this stock price is really trading low relative to where it has traded before historically. And given all those fundamentals that I've gone through, I think that we have a likelihood of this market starting to recover. Probably we could see prices starting to move higher to those levels that I've talked about. However, I repeat, this is not a buy recommendation. If you buy and you lose money, it's at your own risk. If you buy and you're trapped in your liquidation again, it's your own risk. But at least I've shared with you a simple process that you can add layers. I've shared with you the skeleton, so you can add the meat into it and come up with a very simple investment process. Just look at which equities do you want, what metrics are you looking for, how will you make decisions, and then you can just start buying. So, but I won't talk to you about how much to allocate and all that, which is a personal decision. So this is just an introduction into other things that we do. So it's also important if you're trading. I really find it weird that traders want to just know one thing, like I want to do CFDs or I'm just doing CFDs. I find that weird because if you're going to trade for a very long time, yes, there's the fact that you're looking to make money, but I think there's also the challenge of this long-term investing. If you've made money from, let's say, prop trading, you can put it in shares and it grows further there. So you're doing some long-term investing. So by the end of the day, it's generally nice for you to develop these skills. These are the fundamentals of finance. So if you don't understand the fundamentals of finance, I really wonder why you think it's wrong for someone to spend time doing that, because I find that retail traders really don't like going into that direction. They really like just focusing on what prices are doing and making money. And I think long term, once you've been in the market for long enough, you realize that finance is quite wide and you can really increase your scope by learning these other things. So that's an intro into the fundamentals of investing. I've not gone into details about what all these things are. If I was, I'd have to explain to you what is a balance sheet, what is a statement of income, what is a cash flow statement. I would have to go through specific numbers explaining to you. I'd have to tell you which price to earnings ratio I'm looking for. I'd have to tell you what trends I'm looking for from a macro theme. But at least I've shared with you broadly how you can go about that. So with that said, you can stop there.